Tas Costi from Costi Cohen, welcome to
Thanks, Mark.
Property Insights, mate.
Thank you.
How you going, all right?
Very well. How are you?
Very good, very
Excellent.
good. So, commercial buyers, agents.
Correct.
Right, so let's just let's unpack that a little bit. Buyer's agent, give me a quick description of what that means exactly.
So buyer's agent, property buyer's agent. So essentially we take on a particular mandate, we go out there and source all the opportunities within the brief, whether it's off-market, post-market, price-reduced stock, pre-market. We filter through opportunities to a client, run due diligence, negotiate and exchange property for a client. So it's a full-service commercial buyer's agency.
So your client is a buyer as opposed to the vendor.
Correct.
So you make sure that the buyer buys what their brief is within, that's price, geography, quality, size, blah, blah, blah. So you take a full brief off them?
Spot on.
Yeah, so you're a commercial buyer's agent. So commercial means shops, buildings, offices, industrial.
Correct.
Did I include everything?
Yeah, exactly. So essentially everything that's not a house or an apartment, we buy.
What about a residential investment?
Correct. Look, if it's a single apartment, we don't. But if it's say a block of 2, block of 3, and upwards, we do.
Yeah, so that'd be considered a commercial acquisition.
Correct.
What does Costi Cohen do that makes you an outlier, better than everybody else?
So when we started Feb 1, 2021. We started as the first dedicated commercial buyers agency. So there were a lot of independents out there, but no one that actually turned it into an agency. So from our end, it's being able to provide that full service for commercial buyers agency. So it makes us different from a lot of the selling agents in the market, and those independent commercial buyers agents that may say that they specialize in it.
So to become a buyer's agent, or
Yep.
commercial buyer's agent, do you have to register? Do you have to register with somebody or do a course, or how do you become one of these people?
You need to have your agency license.
Yeah.
So you definitely need one of those. But I mean, it is apart from that, it is quite a low barrier to entry. But I mean, to become an actual commercial buyers agency, obviously you need to know about the commercial market and commercial different types of obviously commercial assets and things like that as well.
So where did you guys work before that?
So before I was actually working in a commercial construction firm. Eventually went to a development firm and then ended up in acquisition. So covered every facet of property before I ended up into acquisition.
So your strength is around commercial developments, those sorts of things?
Correct.
Yeah. But your firm has people who do all facets of commercial buying.
Exactly. So we've got now the way we've set up now is that we've got someone that's focusing on industrial, someone that's focusing on retail, someone that's focused on office. So every facet is covered, and we do have specialists in every single asset class.
So given right now it's an unusual period in Australia with interest rates doing what they're doing and yields doing what they're doing and all that sort of stuff, demand, etc., changing. As a principal of Costi Cohen, is there some area of commercial that's doing pretty well relative to other areas? Like, is industrial doing better than, say, I don't know, retail?
Yeah, definitely. I mean, you've got, say, a lot of industrial, which is incredibly low vacancy rates right now. You've got retail, like non-discretionary retail, like your Woolworths, your Coles. So they're performing incredibly well. And then it just depends what price point you're in at the market as well. I mean, there's different buyers. I mean, we're servicing everything from mum and dad investors right up to, listed funds. So right now what you're finding is there's points in the market that are great buying. And I think those are predominantly industrial and retail. So
is that because you're saying when they're great buying is because, not because they're cheap, but because the tenancy strength is quite strong?
Correct. That viability of the tenant, that strength, right now is probably one of the most attractive things to people in the market, especially with people that find that things may be uncertain in the market or they're not so sure. That the one thing that's attracting people to these types of assets are the types of tenants. So
yeah, because it's interesting. It's not like residential property. Residential property we want to buy because we get excited when it's getting cheap because we say, oh wow, I can go and buy that pretty cheap.
Exactly.
But in commercial, I'm looking for a return. I'm looking for a yield. So the reason I go to buy commercial property is not because it's cheap, but because it's got the yield I need for the money I'm going to invest.
Correct.
And when it comes to yield, I mean, I get it's quite a confusing environment, but it's sort of forever changing. But yield means the return on the investment. In other words, if I pay $1 million, if I'm getting $100,000 a year net rent, that is considered to be a 10% yield.
Correct.
For argument's sake.
Yeah.
What are the yields look like in the marketplace? I know you cover a lot of stuff like industrial. Leave development aside because that's too complicated.
Yeah.
But let's just say retail, industrial, and office space. What are we looking at in terms of yield? Like, are we looking at 2%?
Yeah. So we definitely were. Now things have softened a little. So what we're finding
softened mean in this market?
So softened means that you're essentially, for what you're paying, you're probably getting a bit higher return or a bit higher yield for your money. So starting from, say, core metropolitan markets, so say your Sydney, your Melbourne, your Brisbane, that will attract a lower yield because people are prepared to pay more to be in the metropolitan markets. But as you venture out into the more regional markets, things do soften a little in terms of a yield. So for what you're paying...
You mean yields get bigger?
Correct.
When you say soften.
Exactly.
Yeah, they get stronger.
Exactly right.
Better.
So from what you're paying, so maybe say an industrial asset right now might be attracting yields of 3.5% to 4% net. Then, as you venture out, you might be able to attract a yield of 5.5% or 6%.
Yeah, as you get further out.
As you get further out, correct.
And is that because it's the likelihood of getting a tenant is a lot less, or the type of tenant is more risky as you get further out?
No, I just think there's a lot more stock. It's probably a little bit harder to access. So there's other factors there which make metropolitan assets a bit more attractive, that people aren't as inclined to venture out as far, or a little bit harder to manage if they're a little bit further out as well. So they're probably the key fundamental points.
So what are if we could just let's look at office space for argument's sake. And let's say metropolitan office space, say Sydney.
Yeah.
Let's say a building in the Sydney, which is Sydney City, let's say around Phillip Street, around that area. I'm not asking anything specific, but and it's a whole floor, 1,000 square meters, strata title of an office building.
Yeah.
What sort of yields are they attracting? Are they, in other words, what return are they selling at? 2% or 3% or 4%? Is it more or less than the interest rate you could get it on deposit at Commonwealth Bank? What's it looking like?
It depends on the strength of the tenant. It depends on the term of the tenancy as well.
Right.
So if you want to talk the city right now, your yields are probably getting a bit more for your money because people are a bit less inclined to buy in the city right now. You've got quite high vacancy rates in the city, which arguably means that you're getting some incredible buys happening in the city now. I mean, the city will always be the city. So you might be attracting a yield of, say, 4%, depending on the tenure, depending on the length of the term.
Right. So you're right. So that's important point to make.
Yep.
So someone might be paying you really good rent, but they're only going to be there for 2 years, and they might go at the end of 2 years, and you've got no rent because then you've got to try and find a tenant, which is not easy to do.
Exactly.
But if someone's there for 15 years, for the next 15 years, they're committed to 15 years. That's probably going to have a lower yield, because you don't have to stuff around trying to find a new tenant for the next 15 years.
Spot on.
And then these things, is CPI increases, that's probably a pretty good thing these days because CPI is pretty high.
Exactly.
So, CPI could be 5 or 6, 7% even.
Exactly.
And if you're getting 5% increases, that's pretty cool.
Exactly.
Whereas a year ago, you were getting 1% increase or 1.2% increase because CPI was so low.
Exactly.
So what are the yields in the city? Let's just assume a 10-year lease. What are we looking at? We're looking at 2 or 3%. Are we looking at, or is it, because it was pretty low before?
Exactly.
Is it getting higher now?
It's definitely getting higher.
Is it because, and do these things chase interest rates? Because is it a relative game? And people say, well, the risk associated with that particular building and those tenancies, those commercial tenants, has to be relative to what I can get if I put my money on deposit with the bank, which is no risk. Therefore, you have to pay a higher return because I just put my money in the bank and earn 3% on my deposit. Yep. So, therefore, the yield has to be higher than that because, everyone's riskier than putting my money on a deposit with the bank.
Exactly.
Is that a fair thing to say?
What it comes down to is what you do have in the cities, you've got different parts of the city that quality parts of the city as well. I'm not to say that there's obviously the lower end of the city as well,
Yeah.
but say the quality parts you've got, like say on Macquarie Street, you've got Hudson House, which people die to get into that building. There's whole full floor levels with some of the biggest names that actually own in that building that are prepared to pay, sub 2.5% or 3% yields. They're prepared to pay higher square meter rates, which might be, as high as $25,000 a square meter, which is pretty crazy for the city. But I mean, you've got, if you compare it to a resi, and what you'll probably look at is, you've got unobstructed views of the east, over Hyde Park, you're looking over the water. It's a premium product, right? Whereas if you go down to the lower end of the city, yes, you could have a similar tenure with over a 10-year lease, paying similar money, but at the same time, you might be at the worst end of the city, so that might attract a higher yield.
So no wonder people employ buyer's agents, because it's complicated.
Exactly.
There's there's a lot of factors to consider when it comes to making sure you pay the right price.
Yep.
And I guess that's why a buyer's agent, commercial buyer's agent, becomes important. Yep. So let's say I was keen on a strata floor space in Chifley area in Sydney, and it was 1,000 square meters, and I had a tenant in there who's got got a 10-year lease or something like that. And what are the things that you go through if I engaged you as my agent to buy this for me at auction, or it might be up for sale? What are the things you go through, and what do you do at Costi Cohen? Like, what do you do for your client,
Yeah.
me, the buyer?
Yeah. So the first thing is, once a client comes through, we actually workshop their mandate. Is it achievable? Are we engaging this from the very beginning to actually say, is it achievable? Not to say that we take on easy briefs, but we need to obviously be realistic with the market's currently at. And if we've got to have that conversation at the very beginning, we do that. Once we're engaged, we go out to the market. We filter out every option in the market. We're almost like detectives. So when we go to the market, say if it is Chifley, for example, and say you can't buy in Chifley, well, what's your next best option? Is it Hudson House?
Yep.
Is it another property on York Street that you might be able to achieve the similar comparison? So, what's your wish list look like?
How do you do that? Like, how do you get all the information, all the data? I mean,
Look, we've got different programs. A lot's experience driven as well. I mean, we've bought quite a bit in the city. So, I mean, you need to know your markets. And for us, that's probably one things that people do turn to us for, is that, where obviously we do know we've got enough knowledge across every market to actually be able to filter through and really vet those options of what we're working on with a particular client. So once we've vetted through those options, it's about going through, filtering through, sending those property options to the client, and running a high level due diligence. I mean,
due diligence means what though?
Look, it might be anything from, say on an office side, it might be, what's the actual strata, being able to assess what the actual strata is, or, working with a solicitor to see whether there's any hairs on the property, or
in other words, there's a whole lot of remedial work to be done, for
correct.
example, that you don't know about.
Exactly.
You find that out.
Exactly. Checking viability of the tenant. Is the tenant about to go under?
Yep.
Is the tenant what's the tenant's business look like? So all those key fundamental points that a lot of people, you'd be surprised, don't actually think about when they're going through a transaction. A lot of people are just so focused on, I need 1,000 square meters. This is what I'm prepared to pay, and that's it. I might buy something with like a 5-year term, and whatever happens after that. So checking tenant demand. I mean, yes, we wish we had a crystal ball, but if you're buying at the better part of the city for the best price, you really can't go wrong. So
That's interesting. So you do all the due diligence. You charge obviously the tenant, the buyer a fee. Is it a percentage of the purchase price,
correct.
or is it a fee? You only get paid if you succeed, or how?
That's right. So we'll get paid a small retainer up front to lock in the brief, because we do work one-to-one with a lot of our clients, and then we get paid a success fee on the back end as well.
Right. So you take a lot of risk on it.
Exactly.
If the buyer doesn't proceed for whatever reason.
Exactly. I mean, we've honestly transacted for some clients in the first 24 hours of working with them. Other clients, it does take a bit more time. A lot of clients ask, well, what happens to the period of our agreement once we continue through? We're like, look, we're genuinely outcomes driven. So it's not like for us, it's being able to get your result within this amount of time. Roughly, it takes between 6 to 8 weeks if we can apply the right task. But not every mandate is, this is what it is. Like, we might have some clients that their mandate might be, let's buy next door neighbor, or let's buy upstairs from us because we need to expand the business, and that might take a period of a year. So you just don't know what the particular mandate might be. We get, it all comes in all shapes and sizes. So,
and how important is it for you guys to have, you as a buyer's agent, to have relationships with the vendors' agents, like I don't know, let's say in commercial, it's, I don't know, Collier's, or CBRE or I don't know who the big moms are, but those sorts of organisations. How do you socialise with them? Or how does it all work?
It's an incredible question, because like a lot of people, when we first started, there was a bit of a challenge at the very beginning, because like people would say, well, we've got a relationship with so-and-so, why would we engage your services? And I think over time, when they started competing against us, when we built those relationships in the market, I mean, there's, say, close to 2,500 commercial agents just in New South Wales, right? So being able to go through and speak to sales agents, leasing agents, property managers, like we genuinely are detectives. So, you know, whether it's breakfast, lunch, dinners, events, seeing these people, being front of mind with these people, now buying capacity with a few of these agents we might be buying 5 to 10 properties a year from these guys. So, you know, are they going to be dealing with a person that's got the one property to buy off them in 5 years, or the people that are buying 5 to 10 in a year? So I think there's a lot of that, obviously that repeat business, and building up those relationships in the time that we've been in business. So.
I was just talking to Damien and Cooley the other day, and Damien said to me, if you're a buyer, it's a good idea to have a buyer's agent, because auctioneers know how to run the room.
Yeah.
What's your experience in that? What do you think about that statement? You're obviously going to say, yes, everyone should have a buyer's agent, but what do you do for a buyer as a buyer's agent? What do you do for a buyer in the auction room? Look,
I think one of the main things that I would say people need a buyer's agent in an auction room, not to say everyone's ever going to use one, but if one of the main things is, we sponsor some of the auction rooms in the city, right? The commercial auction room.
What does that mean, you sponsor?
So we sponsor. So we're the main sponsor in the auction room for Auction Works, for example.
Right.
Now, out of that room, we see a number of buyers that come in every week. Whether it's an emotional attachment, or whether it's, the fact they if they're developers, they need to roll teams into, but time and time again, every Tuesday, we see people come in that room and actually say, we're prepared to pay a bit extra. And people that get caught overpaying is probably one of the main things of our service that we can actually limit. So yes, a lot of our transactions do happen before it even gets to the auction room. But I mean, if you're in that auction room, having that emotional attachment is a big part. And you'd be surprised. You think emotion's sort of only on the residential side. It's not. It actually happens on the commercial side as well. So, I mean, even we represented some clients a few weeks ago, and they were saying, go further. And we just knew it was way above market value. So you need to be able to have that time and be able to have that detachment to say, stop right there. Like, you're paying way over market. We know we can find you something better.
Yeah, because people's egos get involved.
Exactly.
And they say, I'm not going to let them outbid me.
Yeah.
And I need this and all this. But it doesn't take much to reduce the yield if you're paying too much. What's interesting about commercial property is, as opposed to residential property, people will say to you, when should I buy residential property? And usually the answer is, if you can afford it and you like it and you found the right place, go buy. It doesn't matter whether it's the bottom of the market or not the bottom of the market, because you buy with a 10-year view and you're buying because you want to live in it, usually. Commercial property is a bit different. Unless you're desperate to move into premises, like absolutely desperate, and that shouldn't be the case these days because there's plenty of places you can move into. Yeah. Commercial buying is not like that. Commercial buying is, this is the price based on the yield that I'm going to pay, because that's the yield I'm chasing. And for every dollar you pay above that, your yield goes back, it reduces, so you get less return. So it's probably not a good idea to be emotional and let your ego get in the way of a good decision when it comes to commercial property. You've got to stick to your guns. Would that be right?
Definitely, for sure.
Pay the price based on the yield, which is based on who the tenant is. And if that yield suits you in terms of your return on your portfolio that you're trying to have, then do the deal. If it doesn't, if that yield is watered down because someone's expecting a higher price, then don't buy it.
Spot on.
How do you take the emotion? How do you take the emotion out of the buyer? What do you do?
We assess it based on what their motivation is. I think you just said it before in terms of whether people's emotions drive prices, and I think for us is being able to say, guys, like, why would we pay more? We know we've got another 2 options that we can look at tomorrow for a decent yield, if not better. Why are we going to go through and pay more for this particular property? like I said before, someone that might be looking to buy next door is prepared to pay a bit extra, and that's something that we need to assess.
That's
as
more
well.
strategic, though, isn't
Correct.
it? Yeah,
exactly right. But at the same time, it's going to be governed by what is your fund. Like we've got, say, two elderly clients that are looking to buy an investment purely off income. They're out of business, so they don't have income coming through, and so they just need to buy this. They've got cash, and they just need to buy an asset for income to be generated. So they're prepared to pay a bit extra to secure a better property with a longer tenure. They're looking for, say, Woolworths up to 30 million. So being able to assess something based on the amount of income that's going to be left in their pocket year on year is something that's their only concern, and they don't mind paying something a bit more for a better quality product, because at the end of the day, that's going to be left to their kids, and they want to make sure that that whatever they're leaving to their kids is a quality product. But if someone came to me tomorrow, we've got a lot of expats that come to us saying, where do we buy and for what do we buy? So just having that right, being able to understand where fair market value is, being able to understand where there's excellent buying and fair market is an important point that we provide back to our clients. So.
And so you just mentioned something important, expats.
Yeah.
So let's say somebody is listening to this and they said, well, I wouldn't mind I don't really want to buy anything just yet, but I'm interested. Do you guys, how does someone contact you for a start?
Look, through our website, my phone numbers, I think, across 3 or 4 different websites. We've got our team's contact details across every website.
So it's costicohen.com.au?
Correct.
Yep. So, and then do they register? Can they do you guys do a newsletter?
Yeah, we do. We do monthly newsletters.
Yep.
So either to clients or to even we've got a lot of corporate partners that are out there as well. So whoever wanted to contact us, we're obviously more than happy to register them. We're always available for a chat as well. So anyone that's happy to contact anyone in our office, more than welcome to.
Yeah, that's cool. So if I'm interested in buying commercial property, I guess we're talking across Australia?
Yep.
Or you just eastern states?
Majority is eastern states right now. I've bought properties in WA and Adelaide and things like that, but majority right now of our focus is eastern seaboard. So
one last question. Which metro area performs the best, do you reckon, in terms of yield? Like, where am I getting the best yields? I just in percentage terms, and not based on. I'm not saying to you, Woolworths, Tenant versus I don't know, whoever else. I'm just saying, like, who's showing the best yields metropolitan? Is it Brisbane or Melbourne or Sydney?
On the east, definitely Brisbane. It's always been Brisbane, but there's always been a bit of a cross over the past sort of 12 months that has sharpened quite a bit. So you've always found that Melbourne and Sydney were probably the best metropolitan markets, but Brisbane in short.
Brisbane demands a premium in terms of yield, because
Correct.
It's probably a smaller city or something
Exactly.
like that. So if I got $1 million, $3 million, or $10 million, I'm probably better off. I'll probably get a slightly better return, even if Woolworths is the same tenant in all places. I'll probably get a slightly better return in Brisbane.
Correct.
Yeah, okay, that's interesting.
Yeah.
Well, Tas, thanks very much for coming in. That was a very interesting conversation. You really explained quite a lot about the importance of getting, I think, a buyer's agent for commercial transactions. One last question.
Yeah.
Do you guys manage property as well?
We do.
Yeah, so there's no point me buying commercial property and all of a sudden I've got to start working out how to manage it. So you have a management division as well. So collect the rent, make sure this is fixed, that's done, sorted, and tenants have got someone to talk to.
That's exactly right. So it's a one-stop shop for us.
One-stop shop.
Exactly. So we try and keep all our clients in our ecosystem. So from the minute that they buy to the minute that we manage, and then the leasing side, for us, it's being able to keep them within that circle. So
what about when they want to sell?
within that, we'd have to refer it out. So
Okay.
we won't do the selling part.
Yeah, but you might end up being a buyer for somebody else, but that's a bit tricky. Anyway,
Exactly.
Good luck to you, mate. Thanks very much. That was great.
Thanks, Mark.
Thanks very much, Tas. Appreciate it.
Thank you. Thanks.